Stephen Roach, Yale University senior fellow and former Morgan Stanley Asian chairman, estimates a 35% decline in the US dollar against its major rivals. This is largely due to our country's deficit and dwindling savings. The deficit is getting worse as the government spends trillions of dollars in an effort to mitigate the harm from COVID-19, and this may only make matters worse. In an interview with CNBC Trading Nation on Monday, the escalation of tension with China and other countries will create a domino effect in our expenses in the worst possible time. Many countries are also replacing the US dollar reserve with precious metals and other currencies such as the Yuan, which is China's main currency. Yuan's increasing appeal from investors is due to Beijing's structural reforms that could shift the country's manufacturing-heavy economy to one more focused on service and one with greater consumer-led growth, very similar to the United States. Roach stated that although a weaker dollar could benefit US exports in the short term, it would prove to be problematic over the long term and could be very concerning. This is not the first time the fall of the US dollar has been predicted. Just last week, Bloomberg ran a large op-ed that stated, and I quote, "Era of the US dollar's exorbitant privilege as the world's primary reserve currency is coming to an end." Bloomberg also states that the losses forced from COVID-19 pandemic serve as the booster for the dollar's potential woes and potential collapse. Worries about the global economy have traditionally encouraged buying of US dollars along with other safe havens because of the perception of the US as a very stable economy and a very stable currency. The growth deficits, move of other countries to strengthen their own economies, their own currencies, and their own policies might eventually change that mindset and perception and deliver a gut punch to the greenback. It only means that you cannot have significant financial plans that are structured towards the dollar. And a lot of the old knowledge and perception is wrong. You have to adapt. Adapting to this new economy is uncomfortable, but it really is the way to go for investments for the future. You need to invest in assets that have never failed. Gold, silver, palladium, and platinum, proven to be the only assets that never waver through economic collapse. Actually, they thrive. It is the only investment that guarantees wealth right now, and I think for years to come, we're going to see the values of precious metals continue to rise. And guess what? You can put gold into your IRA. So if you have an old 401k or any kind of IRA and you want to roll that into actual physical gold, we can help you do that. And if you want to learn how to do that, check out our website at noblegoldinvestments.com. That's noblegoldinvestments.com.